Welcome back to AM Career Solutions. So yesterday or in the previous video, I have said about mutual fund. What is mutual fund and how to go for that, and what is the benefit of mutual fund and comparatively bank fixed deposit, real estate, or you can say share market and other things. Okay. So what are the benefits you are going to get from mutual fund? The history of mutual fund. What is exactly what do you understand by mutual fund? So let us resume that topic from today also. I'm going to resume that topic. Okay. So before coming to my topic, I want to say that if you are not subscribing my channel, subscribe first. Watch the full video because it's a very important video. Mutual fund is a very important concept that everyone should understand it. Being a student, I am not saying you, because you will be requiring it while going to face an interviews, while you will be working in a corporate sector, while you have a surplus money. That means you have enough money and you do not have sufficient knowledge to invest in the stock market, but still you are expecting good amount of return from that. Okay. आपके पास पैसा है लेकिन आपके पास नॉलेज नहीं है उतना कि शेयर मार्केट में आप इन्वेस्ट कर सके और वो रिस्क को मिनिमाइज करके आप पैसा अर्न कर सके. सो दैट इन हियर इफ यू हैव you know what exactly is mutual fund is, you can invest in mutual fund and you can expect a good amount of return from mutual fund also than bank FD or bank savings account or whatever the thing may be. Okay, so let us start our topic. That is mutual fund or type of mutual fund. How many types of mutual fund are there? Okay, let us see. So the type of mutual fund, if I will say, as per your academics is concerned, the structure of mutual fund is on the basis of structure. Mutual fund is divided into three types. That is open-ended, close-ended, and another is interval fund. So three types of funds are there. So open-ended, close-ended, and interval. What is open-ended? At any point of time you can invest fund in mutual fund and you can exit. Exit means you can withdraw your fund or you can close your scheme also. That is open-ended. So are you getting that? I am just elaborating it very briefly. Okay, I am not going so much deeper into that topic because it will take a lot of time. Then close-ended. Close-ended means NFO, during NFO. Like in open-ended also NFO is there. When a scheme is launching for the first time in mutual fund, that is known as NFO. So NFO stands for new fund offer. New fund offer. So like in close-ended, when NFO is launching, at that point of time only for 15 days or for 20 days you can invest or you can invest or entry, but you can't exit before the lock-in time. Actually in close-ended form or close-ended fund, there is a lock-in period of time, that is 3 years or 5 years or more than that. Okay, within that years you cannot exit from that fund or you cannot withdraw your funds from that fund. That is close-ended. That means once the fund NFO has been over, NFO period has been over, the fund has been closed, and after the lock-in period you can withdraw or exit that fund. Then interval fund. It is the mix of open-ended and close-ended, you can say. Interval fund is. So what is interval fund? Actually a window is opened for the investor like 3 months or 6 months. In between 3 months or 6 months, a window is opened for the investor where they can make their entry and or they can exit. Okay, within that window time, when the company is giving a window, in that period of time the investor can entry or invest and they can exit or withdraw or close that scheme. Otherwise they cannot, because it is also one type of closed end fund also we can say, but it is open for some period of times or within interval time period, so that it is known as interval fund. Let us see here investment objective. So let us see here, on the basis of investment objective, so in mutual fund is divided into three types. One is equity, another is debt, another is liquid. What is equity? Equity includes the equity share of the companies, where debt includes the debentures, bonds, and any fixed securities. Fixed securities means they have some fixed rate of interest. If the mutual fund is investing in somewhere that is and getting fixed rate of interest, that is debt fund. That includes debenture, bond, or any fixed income securities. Fixed income securities. And a liquid form is actually liquid fund means it is invested in money market. So let us first see equity share. This includes equity share of the company. It is again also divided into three types, or three types or more than that. That is large cap, mid cap, or small cap. Large cap, mid cap, small cap. Also multi cap are there. Large cap means only large, large capitalization company are there. Large capitalization means, I have said you before, there are two type of index. That is Nifty and Sensex. Okay, so Nifty and Sensex. So they have a ranking method, like top 100 company. The top 100 companies coming under large capitalization. Okay, whether it is Sensex or Nifty. Nifty 50 are there, top 50. So like that also, it is also including large cap. Okay, so up to 100 large cap, up 100 to 200 companies, 250 companies listed by the index is mid cap, and more 250 or more is known as small cap, and multi cap is the mixture of large cap plus mid cap plus small cap. It is the equity fund. Okay, then coming to debt fund, these are also the debt fund, like these are invested in debenture bond or having fixed income securities. So equity is risky, so here market, it is linked to market, so up and down are there. The value of your investment will go up and go down as per the market or stock market, but it is less riskier than the stock market, I can say here, because it is, the money is diversified into so many companies. Okay, the debt fund, it is having a fixed rate of interest like a 7 to 9%. Like bank fixed deposit we are doing, debt fund is like that. And liquid fund is invested in a money market instrument. That means which is governed by RBI. Like it is less risky or very less risk. Like bank, you can say, you can make it as a saving account also, because you can withdraw your money at any point of time. You can deposit money at any point of time, and you can expect also 5 to 7% of interest here in the liquid fund, compared to bank where you are getting 2.5 to 3.5, or you can expect your 4 to 6% of interest. It's quietly, I think you can say it's quite good than bank account or saving account. You can make it as a saving account and you can get a good return, as well as it is a safe fund where it is not linked to market, especially stock market. Here also it is fixed 7 to 9%, but I can say these are somehow more risky than the liquid fund, and equity are more risky than the debt fund. So this is the highest risky fund. It is less risky than equity, and it is very less risky, or we can say no risky. We cannot say no risky, so we can say very less risky in liquid fund. So you can invest in liquid fund at any point of time. Okay, so money market instrument means these are invested in a treasury bill, certificate of deposit, like this. I have said you what are the short term investment or liquid money market instrument. I have said you in the previous videos. Okay, so let us see, this is the type of mutual fund. So there are other types of mutual fund schemes are there, like ELSS, that is equity linked savings scheme. Equity linked savings scheme, it is a tax savings fund. It is a tax saving fund having a lock-in period of time for 3 to 5 years specially, and if you will wait for more than 5 years, you can expect here 15 to 18% of interest or 13 to 15% of interest minimum. So actually when you are investing in ELSS, you are reducing your tax burden. If you are in a high tax bracket, it will be a better option for you, that is ELSS. Okay, so here you have more than 3 years of lock-in period of time. You cannot withdraw your money before 3 years or 5 years. Okay, so that is ELSS. So another type of scheme are there, like a gold fund, where your fund or your money are invested in gold. ETF, you can say closed-ended fund are traded in the exchange, so that is known as exchange traded fund. ETF, exchange traded fund, those are the fund which are traded in the stock exchange are known as ETF. Okay, ETF. Another is known as fund of fund. That means this your money is invested in so many funds. Here your invested money is different companies, but it includes different funds. Okay, another is known as index fund. Your fund are invested in index like Nifty and Sensex. This is index fund. Okay, so another some types of funds, mutual funds are there, like you can say fixed income fund. Those are coming under debt part. Okay, high return based fund, those are coming under equity part. And very short term or short term funds, those are coming under liquid fund. So we can say this is for equity are specially for long term purposes, but you can withdraw your money. This is advantages than the fixed deposit. Or only entry charge is there, 1 to 2% exit charge or entry charge is there. If you withdraw your money before 1 year, you may be charged 1% or 2% of a fine. That is known as charge, exit charge. Okay, so that is you have to pay here. But here in liquid you do not have any exit charge. Okay, so you can invest any point of time and you can withdraw any point of time. Another types of funds are there, like a thematic fund. Your fund are invested in different themes, like food themes or manufacturing things or something like that. They are known as thematic fund. Sectoral fund are there, where your funds are invested in different sector, like pharma companies or pharma sector. Okay, food sector, FMCG sector. These are known as sectoral fund. Arbitrage fund are there also, where you are shifting your fund from one index to another index and getting a good return, or that is not more return, we can say. So this is arbitrage fund. So how to invest in a mutual fund? As per your requirement, I have said you the different types of fund. What you will feel most suitable, you can invest in that type of funds. So through what? Through bank you can invest, through distributors you can invest, through AMC you can invest, like the mutual fund companies like Aditya Birla, HDFC, ICICI, Axis, Mirai Asset. You can invest through the AMC directly also. IFA also, they are there, independent financial advisor, you can invest through them also. Here you can say in through bank you can invest in POSB bank as well as private bank. So they have tie up with that banks, you can invest through them also. Also they have their own mutual fund where you can invest there. Nowadays you can invest directly digitally or online through online platform, as everyone has having a smartphone today. So you need not go to anywhere. You can invest your money in Grow app. Grab app is there, Grow app. ET Money one apps is there, you can invest there. Paytm is there, and other lot of apps are there where you can invest your money. For that you need to having KYC registration. You have to register some important documents, and as per the list, like Aadhaar card, PAN card is mandatory. In mutual fund you have PAN card is mandatory, but you do not need a demat account here because you are not directly investing in stock market, so you need not need a demat account. Only you have to complete your KYC, okay, by giving Aadhaar card and PAN card, and after that you have to sign a form, then you can invest in mutual fund. Okay, I have shared you these three or the sources of mutual fund through which you can invest your funds. Okay, so in this way you can invest your money in mutual fund. Okay, so I have said you what is the mutual fund, types of mutual fund, the history of mutual fund, the benefits of mutual fund, and how to invest in mutual fund. Which type fund will be suitable for you as per the requirements, like long term, short term, middle term, equity, debt, liquidity, ELSS or tax saving scheme, and a lot of funds are there. As per your requirement, you will invest, and as per your risk capacity or risk taking capacity in expected rate of return, you can invest in that type of funds, and you can invest through banks as well as whatever the same sources I have said you, IFA, or in online platform you can invest in mutual fund. So this is quietly compared safe. Mutual fund is considered to be safe if you are waiting for long term period fund, and liquid fund is considered almost a safe one. Okay, so you need not to worry about liquid funds, and therefore also having fixed rate of interest, but you cannot withdraw your money instantly, but in liquid fund you can do. Okay, I think I have cleared all your doubts regarding mutual fund. Okay, so if you are liking this वीडियो, अगर आपको ये वीडियो मेरा अच्छा लगा है तो सब्सक्राइब कीजिए, पूरा वीडियो लास्ट तक देखिए बिकॉज इट्स वेरी इंपॉर्टेंट वीडियो फॉर यू एंड शेयर कीजिए बिकॉज इट्स इंपॉर्टेंट फॉर एवरीवन सो दैट एवरीवन शुड नो अबाउट द म्यूचुअल फंड एंड दे शुड कंट्रीब्यूट टुवर्ड्स the capital market or stock market so that our economy also will grow. Okay, so if you have any queries you can comment down below and I will be answering you to that questions also. Okay, so subscribe कीजिए, share कीजिए, like कीजिए and for today this much. Bye bye, thank you.